Welcome to BigONE Weekly News Update. I'm Sophia. Crypto markets continued their upward trajectory last week, supported by improving global risk sentiment and accelerating institutional momentum. But beneath the surface, a more structural shift is taking shape, one that could redefine how Bitcoin is accumulated at scale. Markets rally as risk appetite returns. Digital assets extended their rebound, with Bitcoin rising nearly 6% to close around $78,670. Ethereum and Solana followed with solid, though smaller, gains. The move reflects a broader recovery in risk appetite across global markets. U.S. equities have been particularly strong. The Nasdaq 100 is up roughly 15% month to date, marking one of its best performances in over 2 decades. Semiconductor stocks have surged, and major indices including the S&P 500 and Nasdaq have pushed to new highs. At the macro level, expectations for monetary easing have strengthened. Progress on the Federal Reserve leadership transition and easing political pressure on policymakers have supported rate cut expectations, pushing short-term Treasury yields lower. MSTR becomes Bitcoin's dominant buyer. Within crypto, one player continues to stand out. Strategy, MSTR. The company added over 34,000 BTC last week, bringing its total holdings to more than 815,000 BTC, now exceeding the holdings of BlackRock's iShares Bitcoin Trust, the world's largest spot Bitcoin ETF. This marks a significant milestone, reinforcing MSTR's role as one of the most important sources of structural demand for Bitcoin. More importantly, the market is beginning to focus on a symbolic threshold: whether MSTR could eventually surpass the estimated Bitcoin holdings of Satoshi Nakamoto. At its current pace, that possibility is no longer hypothetical. If recent accumulation continues, MSTR could reach that level as early as late 2026. Even under more conservative assumptions, the trajectory points toward this milestone within the next few years. This is not just about scale, it represents a shift in how Bitcoin is held. Corporate balance sheets are emerging as long-term accumulation vehicles, potentially rivaling ETFs and even early adopters. Regulation approaches a critical window. While market momentum builds, the regulatory backdrop remains uncertain. The Clarity Act, a key U.S. crypto market structure bill, is approaching a narrowing legislative window. Progress has slowed in recent weeks, and the period leading up to late May is widely seen as a crucial checkpoint. Beyond that, the political calendar, particularly the upcoming election cycle, could push crypto legislation down the priority list. At the center of negotiations is the debate over stablecoin rewards. Traditional banks are concerned that yield-bearing stablecoins could draw deposits away from the banking system, while crypto firms argue that restricting rewards too heavily would stifle innovation. A compromise may be forming, likely involving limits on passive, interest-like yields, while preserving incentives tied to actual network usage. However, if momentum stalls, the bill could be delayed until the next Congress, potentially extending uncertainty into 2027. Macro still drives crypto in the short term. Looking ahead, macroeconomic factors remain key drivers for crypto markets. This week's Federal Reserve rate decision, along with earnings from major technology companies, will shape broader risk sentiment. For digital assets, liquidity expectations and equity market performance continue to play a dominant role in short-term price action. Conclusion: scale changes the narrative. The past week highlights 2 parallel forces shaping the crypto market. On one side, improving macro conditions and institutional adoption are supporting prices and sentiment. On the other, the growing scale of corporate Bitcoin accumulation, led by MSTR, is beginning to reshape market structure itself. The question is no longer whether institutions will participate, but how far they will go. If current trends continue, the next phase of Bitcoin's evolution may not be defined by retail cycles or even ETFs, but by balance sheets large enough to move the market on their own. Join BigONE today and take advantage of the growing cryptocurrency market.